Based on the historical data and forecast, Bitcoin has shown volatility but a general upward trend. The RSI consistently fluctuates around the 50 level, indicating neither strong overbought nor oversold conditions. However, the forecast suggests a continued upward trajectory, with prices expected to reach $111,600. Considering the support price of $106,700 and the recent price movements, I recommend a long position strategy. We will enter a long position at $107,700, placing a stop-loss order at $106,700 to limit potential losses. The initial target price will be $108,700, capitalizing on the forecasted upward movement. To refine this strategy, we will incorporate the Bollinger Bands. If the price touches the lower band, which has been consistently around $101,700 to $101,800, it indicates a potential buying opportunity. However, given the current upward trend and forecast, we will stick with the initial strategy. If the price reaches the upper band, around $109,600, we will consider taking partial profits and adjusting the stop-loss to lock in gains. The final target price will be $111,600, aligning with the forecast data, providing a substantial return on investment. This combined approach leverages both RSI and Bollinger Bands to maximize potential gains while mitigating risks. Based on the historical data and forecast, Ethereum has shown volatility, but a slight upward trend. The RSI values fluctuate between 33.4 and 56.1, indicating periods of both oversold and overbought conditions. The Bollinger Bands have widened, suggesting increased price volatility. Considering the recent upward movement and the forecast prices hovering around $24.40 to $25.30, I propose a moderately aggressive strategy focusing on short-term gains. We will initiate a long position when the RSI dips below 35, targeting the resistance level of 2,680. Specifically, on July 3, 2025, with a forecast price of $24.70 and an RSI of 49.0, we will enter a long position at $2,470. The stop-loss will be set at $2,420, just below the recent support level and the lower Bollinger Band. The initial target price will be $2,580, aiming for a quick profit. If the price reaches $2,580, we will move the stop-loss to break-even at $2,470 and set a secondary target price of $2,680, aligning with the resistance level. This strategy balances risk and reward, capitalizing on the anticipated upward trend while protecting against potential downturns. Based on the historical data and forecast, XRP exhibits a slightly upward trend, with prices fluctuating between support at $2.14 and resistance at $2.24. The RSI indicator shows periods of oversold and overbought conditions, currently hovering around the 50 level. The Bollinger Bands suggest that the price is approaching the upper band, indicating potential for a short-term pullback. Considering these factors, I recommend a long position entry at $2.17, coinciding with the initial forecast price and near the support level. A stop-loss should be placed at $2.12 to protect against a potential downside reversal, and a target price of $2.23, aligning with the recent resistance and the forecast high, should be set. To refine this strategy, we can incorporate the RSI and Bollinger Band signals. When the RSI falls below 35, indicating oversold conditions, we can consider entering a long position. Conversely, when the RSI exceeds 55, suggesting overbought conditions, we can consider taking profits or entering a short position. Furthermore, if the price touches the lower Bollinger Band, it can be a strong indication of an oversold condition and a potential buying opportunity. Combining these signals with the current upward trend, the portfolio will be a long position entry at $2.17, a stop-loss at $2.12, and a target price of $2.23. This blended approach aims to maximize potential returns while mitigating risk. Based on the historical data and forecast, BNB demonstrates a generally upward trend with periods of consolidation. The RSI consistently remains below 80, indicating the asset is not overbought. However, the RSI dipped below 40, suggesting potential oversold conditions. The Bollinger Bands show periods where the price touched the lower band, indicating potential buying opportunities. Considering the forecast prices consistently above $654 and the support level at $650, a long position strategy appears favorable. We will implement a strategy combining RSI and Bollinger Bands. When the RSI falls below 35 and the price touches the lower Bollinger Band, we will enter a long position at $626, with a stop loss placed at $622 to mitigate potential losses. The initial target price will be $646, aiming to capture a quick profit from the upward trend. To maximize returns, we will implement a dynamic target price strategy. If the price reaches $646, we will move the stop loss to break even at $626, securing the initial investment. We will then re-evaluate the market conditions and consider extending the target price to $659 if the RSI remains below 60 and the price continues to trade above the center of the Bollinger Bands. This approach allows us to capitalize on the predicted upward momentum while managing risk effectively. This portfolio combines the strengths of both RSI and Bollinger Bands, providing a robust and adaptable investment strategy for BNB. Based on the historical data and forecast, Solana demonstrates a fluctuating trend with periods of consolidation and upward momentum. The RSI consistently hovers around the 40 to 55 range, indicating neither strong overbought nor oversold conditions. However, the recent forecast prices suggest a slight upward trajectory, with prices expected to reach $148 to $149. Considering the support price of $141 and the resistance of $154, a strategic approach is to initiate a long position when the RSI dips below 35, aiming to capitalize on potential upward movements. Therefore, I recommend entering a long position at $145, setting a stop loss at $142 to mitigate potential losses, and targeting a profit at $153. To further refine this strategy, we can incorporate the Bollinger Bands. When the price touches the lower band, around $133, it signals a potential oversold condition, reinforcing the RSI signal. Conversely, when the price approaches the upper band, around $164, it suggests overbought territory, prompting a reassessment of the trade. Given the current conditions, the combined RSI and Bollinger Band strategy suggests a conservative approach. I recommend a portfolio allocation of 60% to the RSI strategy, entry at $145, stop loss at $142, target at $153, 30% to the Bollinger Band strategy, enter long when price touches the lower band, stop loss at the center of the band, target at the upper band, and 10% for a trailing stop loss strategy to secure profits as the price rises. This diversified approach balances risk and reward, aiming for high returns while protecting against significant losses. Based on the historical data and forecast, TRON shows a generally upward trend with some volatility. The RSI fluctuates, but generally stays above the oversold level of 20. The Bollinger Bands indicate periods of contraction and expansion, suggesting potential breakout opportunities. The forecast prices predict a continued upward trajectory, reaching $0.294. Considering these factors, I recommend a long position strategy focusing on short-term gains. We will utilize a combination of RSI and Bollinger Band signals to maximize profit potential. The entry price for this long position will be $0.282, coinciding with a bounce from the support level and a potential oversold condition based on RSI readings below 50. The stop loss will be set at $0.279, just below the recent low and the bottom of the Bollinger Bands, to limit potential losses. The initial target price will be $0.29, aligning with the forecast price and the upper Bollinger Band. If the price reaches $0.29, we will move the stop loss to the entry price of $0.282 to protect profits and consider a second target price of $0.294 based on the forecast. This strategy aims to capitalize on the predicted upward trend while mitigating risk with carefully placed stop loss orders. Based on the historical data and forecast, Dogecoin shows a slight downtrend with volatility. The RSI consistently hovers around the oversold territory, indicating potential for a rebound. The Bollinger Bands show that the price has been fluctuating within a narrow range, nearing the lower band. Considering these factors, I propose a contrarian strategy focusing on short-term gains. We will initiate a long position at $0.156, capitalizing on the oversold RSI and potential bounce from the lower Bollinger Band. A stop loss will be placed at $0.154 to mitigate risk if the downtrend continues. The initial target price will be $0.169, aligning with the resistance level. To refine this strategy, we will implement a dynamic target adjustment based on RSI. If the price reaches $0.164, we will move the stop loss to the entry price $0.156 to secure profits and reduce risk. If the price continues to rise and the RSI approaches 80, indicating overbought conditions, we will take partial profits at $0.169 and set a new target at $0.17. This layered approach allows us to maximize gains while managing risk effectively. The overall portfolio will be 60% long Dogecoin, 30% in stable coins, and 10% in other altcoins for diversification. Based on the historical data and forecast, Cardano shows a downtrend with significant volatility. The RSI consistently hovers within the oversold territory, indicating potential for a bounce. However, the forecast suggests continued downward pressure, with prices ranging from $0.549 to $0.545. Considering the support price of $0.542 and the Bollinger Bands, I recommend a contrarian strategy aiming to capitalize on short-term bounces while mitigating downside risk. My strategy involves a limited long position. Entry price will be $0.544, coinciding with a forecast low and near the support level. A stop loss will be placed at $0.539, just below the forecast price and below the lower Bollinger Band, to protect against further declines. The target price will be $0.55, aligning with the middle Bollinger Band and a potential short-term resistance. This strategy aims to capture a quick profit from a potential rebound, while the stop loss ensures minimal losses if the downtrend continues. I will allocate 5% of my portfolio to this trade, acknowledging the inherent risks associated with a volatile asset in a downtrend. Based on the historical data and forecast, Bitcoin Cash exhibits a clear upward trend. The price has consistently tested and rebounded from the support level of $491, and the forecast indicates continued upward momentum, reaching $540 by July 9, 2025. The RSI consistently remains above 54, indicating bullish sentiment, and the price is approaching the upper Bollinger Band, suggesting a potential breakout. Therefore, I recommend a long position with an entry price of $518. To manage risk, place a stop-loss order at $510, just below the recent trading range. The initial target price should be $529, aligning with the forecast for July 7, 2025. To maximize potential returns, I suggest a dynamic target price strategy. If the price reaches $529, move the stop-loss to the entry price of $518 to secure profits and limit further losses. As the price continues to rise, adjust the target price to $530 and then $540, tracking the forecast. This approach allows us to capitalize on the ongoing upward trend while protecting profits and minimizing risk. This portfolio combines RSI, Bollinger Bands, and forecast data to create a high-return investment strategy. Based on the historical data and forecast, Sui shows a mixed trend with periods of volatility. The RSI consistently fluctuates around the 40 mark, indicating neither strong overbought nor oversold conditions. However, the recent dip to the 20s on June 25 and 26, followed by a recovery, suggests a potential for a bounce. Considering the support price of $2.67 and the forecast prices hovering around $2.66 to $2.68, a conservative strategy is warranted. I recommend a long position entry at $2.66. Place a stop-loss order at $2.6 to mitigate potential losses if the price breaks below the support. Set a target price at $2.85, aiming for a modest but achievable gain. To refine this strategy, let's incorporate the Bollinger Bands. The price frequently tests the lower band, indicating potential for a rebound. Given the forecast prices near the lower Bollinger Band, a long position at $2.64 could be considered. The stop loss should be set slightly below the lower band at $2.58, and the target price at $2.9, aligning with the resistance level. Combining both RSI and Bollinger Bands, the most efficient portfolio would involve entering a long position at $2.66, setting a stop loss at $2.6, and targeting $2.85. This strategy balances risk and reward, capitalizing on potential support and resistance levels while incorporating technical indicators. Based on the historical data and forecast, FLOKI shows a sideways trend with consistent support around $0.000774 and resistance around $0.000111. The RSI fluctuates between 33.5 and 51.0, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been relatively wide, suggesting volatility. Considering the RSI readings, we will implement an RSI-based strategy. When the RSI falls below 30, we will enter a long position. Specifically, when the RSI drops below 30, we will enter a long position at $0.000703. Our stop loss will be set just below the support level at $0.000774, and our target price will be the resistance level at $0.000111. To refine this strategy, we'll incorporate Bollinger Bands analysis. If the price touches the lower band while the RSI is below 30, it strengthens the buy signal. The forecast data suggests a slight downward trend in the short term. Therefore, our portfolio will primarily focus on the RSI strategy with a slight adjustment based on Bollinger Bands. We will enter a long position at $0.000703, set a stop loss at $0.000774, and target $0.000111. This approach balances the potential for high returns with risk management by utilizing support and resistance levels and technical indicators. Based on the historical data and forecast, Decentraland shows a mixed trend with periods of volatility. The RSI consistently dips below the oversold level of 20, suggesting potential buying opportunities. The Bollinger Bands indicate periods of contraction and expansion, reflecting changing volatility. Considering these factors, I propose a strategy focused on capitalizing on short-term rebounds from oversold conditions. We will implement a buy strategy when the RSI falls below 35 and the price touches the lower Bollinger Band. The entry price will be $0.246, with a stop loss set at $0.236 to mitigate potential losses if the price continues to decline. The target price will be $0.268, aiming for a profit of 22 cents per unit. To refine this strategy, we can incorporate a portfolio approach. Initially, allocate 60% of the capital to the RSI-based buy strategy, 20% to a conservative strategy that waits for the price to break above the upper Bollinger Band, and 20% to a contrarian strategy that shorts the asset when the RSI exceeds 80. For the RSI-based buy strategy, the entry price is $0.246, the stop loss is $0.236, and the target price is $0.268. The conservative strategy will remain inactive given the current market conditions. The contrarian strategy will also remain inactive. This diversified approach aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Uniswap shows a fluctuating trend with consistent support around $7.06. The RSI values generally remain between 42.8 and 58.7, indicating neither strong overbought nor oversold conditions. However, the Bollinger Bands suggest periods of volatility. The forecast for the next week indicates a slight downward pressure initially, followed by a potential upward trend towards $7.14. Considering these factors, I recommend a strategy that combines RSI, Bollinger Bands, and support/resistance levels. My proposed strategy involves a long position when the RSI dips below 50 and the price touches the support level of $7.06. The entry price will be $7.06. We'll set a stop loss just below the lower Bollinger Band, specifically at $6.31 to account for volatility. The initial target price will be the resistance level of $7.41, offering a potential gain of $3.5. If the price reaches $7.41, we will move the stop loss to the entry price of $7.06 to secure profits. A secondary target can be set at the upper Bollinger Band, approximately $7.92, but this carries higher risk. This combined strategy aims to capitalize on short-term price movements while managing risk effectively. Based on the historical data and forecast, Injective shows a sideways trend with fluctuating RSI values between 33.8 and 50.1, indicating periods of both oversold and overbought conditions. The price has been oscillating between a support of $10.9 and a resistance of $11.4. The Bollinger Bands suggest periods of volatility, with the price frequently touching the upper and lower bands. Considering the forecast for the next week, the price is expected to remain around $10.4 to $10.6. Therefore, a combined strategy incorporating RSI, Bollinger Bands, and support/resistance levels is recommended. I propose a strategy focused on short-term trades capitalizing on the sideways movement. We will enter a long position when the RSI dips below 30, near the bottom of the Bollinger Bands and above the support price of $10.9. For example, if the RSI falls to $33.8, we enter a long position at $10.9. Place a stop-loss order at $10.6, just below the lower Bollinger Band. The initial target price would be $11.4, the resistance level. If the price reaches $11.4, we can consider taking partial profits and moving the stop-loss to break even. If the RSI reaches 80 or above, near the top of the Bollinger Bands, consider taking profits and exiting the position. This strategy aims to capture small gains from the price fluctuations within the established range. Based on the historical data and forecast, Virtual's protocol shows a volatile trend with support around $1.43 and resistance around $1.62. The RSI fluctuates between 32.8 and 48.6, indicating periods of oversold and overbought conditions. The Bollinger Bands also reflect volatility, with the price frequently touching the upper and lower bands. Considering the forecast for the next week, which predicts a price range between $1.4 and $1.47, I recommend a strategy focused on short-term gains and risk management. I suggest a buy order at $1.43, coinciding with the support level and an oversold RSI reading. The stop loss should be set at $1.41 to limit potential losses, and the initial target price should be $1.5, aiming for a quick profit as the price moves towards the resistance level. To enhance the strategy, I incorporate the Bollinger Bands. If the price touches the lower band, which has been around $1.33 to $1.28 recently, it signals a potential buying opportunity. However, given the current RSI and forecast, a more conservative approach is warranted. If the price reaches $1.47, consider taking partial profits and moving the stop loss to the entry price of $1.43 to secure gains and protect against a potential reversal. This combined RSI and Bollinger Band strategy aims to capitalize on short-term price movements while effectively managing risk, offering a high probability, high reward opportunity within the current market conditions. Based on the historical data and forecast, EIGEN Eigenlayer shows a slightly bullish trend, fluctuating within a defined range. The RSI consistently remains between 35.7 and 49.8, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show volatility, with the price occasionally touching the lower band. Considering the support price of $1.13 and the forecast for the next week, I recommend a long position strategy. We'll enter a long position at $1.07, placing a stop-loss order at $1.05 to mitigate potential losses if the price declines. The initial target price will be $1.22, aiming for a reasonable profit. To refine this strategy, we'll incorporate RSI signals. If the price touches the lower Bollinger Band and the RSI dips below 35, it signals an oversold condition. In this case, we can enter a long position at $1.05, with a stop-loss at $1.03 and a target price of $1.19. Conversely, if the RSI exceeds 70, it suggests an overbought condition, prompting us to consider a short position. However, given the current trend, we will focus on long positions. The portfolio will prioritize the long strategy with RSI confirmation, as it offers a balance between risk and reward, aligning with a high returns investment approach. Based on the historical data and forecast, Ether.fi has shown volatility with a range between $0.816 and $1.36. The support price is consistently at $0.984, and the resistance is at $1.04. The RSI fluctuates, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price has recently been near the lower band, suggesting a potential bounce. Considering these factors, I recommend a moderately bullish strategy. We will initiate a long position when the RSI falls below 34 and the price touches the support level of $0.984. The entry price will be $0.984. The stop loss will be set slightly below the support at $0.96 to mitigate potential losses if the price breaks down. The initial target price will be the resistance level of $1.04, aiming for a quick profit. To refine the strategy, we will incorporate the Bollinger Bands. If the price bounces off the lower band and the RSI confirms an oversold condition, we will enter a long position at $0.984. The stop loss will remain at $0.96. The first target price is $1.04. If the price reaches this target, we will move the stop loss to the entry price of $0.984 to secure profits and protect against a potential reversal. The second target price will be $1.1, anticipating a further upward movement based on the overall trend. This combined RSI and Bollinger Band strategy aims to capitalize on short-term price fluctuations while managing risk effectively. Based on the historical data and forecast, Bonk shows a slight upward trend, though it has fluctuated within a defined range. The RSI has been hovering around the 40 mark, indicating neither strong overbought nor oversold conditions recently. However, the RSI dipped below 30 a couple of times, suggesting potential oversold opportunities. The Bollinger Bands indicate that the price is currently near the middle band, with recent price action touching the lower band. Considering these factors, I recommend a strategy combining RSI and Bollinger Bands. We will initiate a long position when the RSI falls below 20 and the price touches the lower Bollinger Band. The entry price will be $0.0000122. The stop loss will be set just below the support price at $0.0000147 to protect against a potential downturn. The target price will be $0.0000157, aligning with the center of the Bollinger Bands and a reasonable profit target given the current trend. To refine this strategy, we'll incorporate the forecast data. The forecast suggests a stable price around $0.0000136 to $0.0000139 for the next week. This reinforces the importance of the stop loss at $0.0000147. If the RSI falls below 20 and the price touches the lower Bollinger Band, enter a long position at $0.0000122. Set a stop loss at $0.0000147. If the price reaches the center of the Bollinger Bands, which is $0.0000149, take partial profits. For a more aggressive approach, hold until the price reaches $0.0000157. This combined strategy leverages the RSI for identifying oversold conditions and the Bollinger Bands for confirming entry and exit points, while incorporating the forecast for risk management. Based on the historical data and forecast, Dogwifhat exhibits a volatile trend with recent upward momentum. The RSI consistently fluctuates between 35 and 55, indicating neither strong overbought nor oversold conditions. However, the Bollinger Bands suggest potential trading opportunities. The price has been bouncing between the lower and upper bands, and the forecast indicates a continuation of this pattern. Therefore, I propose a strategy combining RSI and Bollinger Bands for optimal returns. The strategy will focus on buying when the price touches the lower Bollinger Band and selling when it reaches the upper Bollinger Band, with RSI confirmation. Specifically, I recommend entering a long position at $0.797 on July 3, 2025, when the forecast price touches the lower Bollinger Band. Set a stop loss at $0.773, just below the support price, to limit potential losses. The initial target price is $0.838, aligning with the forecast price and the upper Bollinger Band. If the price continues to rise, consider adjusting the target price to $0.909, based on the recent high. This strategy combines technical indicators and forecast data to maximize potential gains while minimizing risk, aiming for a high return on investment. Based on the historical data and forecast, Celestia exhibits a downtrend with significant volatility. The RSI consistently remains below 45, indicating a generally oversold condition, with dips below 30. The forecast suggests continued downward pressure, hovering around $1.36 to $1.34. Considering the support level at $1.35 and the forecast, I recommend a contrarian long position. Entry price should be $1.36, with a stop-loss order placed just below the support level at $1.34. The target price is set at the resistance level of $2.15, aiming to capitalize on a potential rebound. To refine the strategy, we will incorporate the Bollinger Bands. The price is currently near the lower band, suggesting a potential bounce. If the price breaks below the lower Bollinger Band of $1.33, it signals a stronger downtrend, and the trade should be exited. Conversely, if the price touches the middle band of $1.32, it could be a good entry point. The portfolio will prioritize the RSI and Bollinger Band signals, with a slight preference for RSI, given its consistent oversold readings. The risk-reward ratio is favorable, given the significant distance between the entry price and the target price.